Good morning, good afternoon, good evening to everybody watching. This is going to be a really exciting community call episode. We've got two of the most active and most special upcoming projects in the ecosystem. Some of them you have a clear face on who we've got. Some might be a bit new, but both of the projects are really ones to look out for. And before we do get going and bring on the guests, I want to call out two key things. One, Hedera Miami is happening on the 4th of May, right around the corner. If you just search online, Hedera Miami, you'll find out how to sign up. It's completely free. You'll be in the same room as some of the top execs in the US and global finance institution. It's a really good opportunity. Come along. And it's also around the time of the Miami F1. So maybe if you're looking to have a bit of a holiday and a bit of enjoyment, that's a good opportunity. Second thing I want to call out is the new Hedera Community Hub. Again, search that into your browser. Some of my colleagues have done a really amazing work in pulling together all of the activities and activities, fun stuff, and things that we've done in the past into one place. The different programs we've got running, Hedera Community Hub. That's one thing for you to check out. But without further ado, let's bring on the main event. We've got with us today, drum roll please. There we have it. Joe Da Silva and Brandon. Guys, I'll let you introduce yourselves.
Sure, I'll go ahead and kick it off. Some people in the Hedera space might know who I am, but I'm here today wearing the SaucerSwap hat. Obviously, cover the entire Hedera ecosystem. My name is Brandon Hargreaves. Today, I'm here to talk about where we've come as far as SaucerSwap. It's the top DEX on Hedera. Some of the things that we have in the works, the HBAR economy, and the next thing we have in the hopper is version 3. A lot of people might have heard about that, but we're really excited about it and looking forward to it.
Thank you very much, Brandon. Joe?
Hi. This is Joe, co-founder and CEO of Kea Credit. Thank you so much, Hedera, for having me today. So we are bringing private credit on chain on Hedera, the enterprise grade chain. So many interesting things that are happening with us. We're growing at a very good pace. Few really good projects that or verticals that I'm going to open up today and make this conversation worthwhile for you guys. Very interesting things I assure you is coming on to Hedera, and I'm super proud to be part of this call.
Amazing. Yeah, these guys, they're really rethinking finance, and all of it's happening on the Hedera. I mean, Joe, before we get into the questions, and I'll start off with Brandon, because as you mentioned, the SaucerSwap V3, really big. But Joe, before we get into that, I heard that you studied at the London School of Economics.
Yes.
Yeah, I was just there with them today. I was doing a workshop with them, obviously as a governing council member. So there's some really interesting there's some interesting relationships and partnerships happening with us and the LSE, but small world.
Small world. I mean, the people that are sitting on the Hedera Council shows, Hedera doesn't talk small businesses, right? And that's exactly why we are in Hedera, because it doesn't make any noise.
Signal. We're all about the signal.
It's all about
we heard a new one coming on just today. I can't say it, but boy, if this one goes all the way through, Brandon, it might be one of your most viewed videos.
Good stuff. I'm looking forward to it. I'd love to have Joe on for sure.
Yeah. Anyway, let's start off with some questions then, Brandon. So for anyone new to SaucerSwap, what does the platform offer right now?
Sure. Yeah. I mean, it's something that for people that have been in this space, it's natural. But for people that haven't dealt with it before, it is kind of a new concept. It's a decentralized exchange, and its core purpose is to allow people to trade tokens back and forth. Well, how do we do that? Initially, when we launched in 2022, we had version 1. And what version 1 is liquidity providers provide 2 tokens, a pair of tokens in equal amounts, right? And they provide that into a pool, and it provides liquidity across the entire spectrum of the price ratios between those 2 tokens. And when somebody then wants, say you provide, however much amount of USDC and however much amount of HBAR, it's going to be an equal amount. Once you've done that, if somebody, the other type of person that can participate in this is somebody that wants to trade those. And what they can do is, if they want to buy HBAR, they're going to supply more USDC and they're going to take HBAR out of that pool. When they do that, of course, that ratio is going to shift, and that's what causes the difference in prices. The one thing with that, like I mentioned, is it covers the entire range of price possibilities between those two things. So there's going to be those edge cases where you have a moonshot, or if something, completely rugs and goes through the floor, you're still going to have a little bit of your liquidity to help out there. Version 2 is something we launched a couple years after that, and that's concentrated liquidity. So instead of saying, I'm going to provide it for all the different ratios for these two tokens, you're saying, I'm just going to provide liquidity between this price and this price, or this ratio between the two tokens. Now, that's more like what you would see on, a traditional exchange, right? You want all of the liquidity near where it's trading right now, because that's where it's going to be useful. It gives people a lot more control. You might supply, just one of the tokens above the price, or just the other token if you're going on the other side of the price. If the value, or if the price moves through that, then you're completely adding all of that liquidity. So those were the first two versions. It is a really elegant way to allow people to maintain custody of their own tokens and supply those tokens into those pools and facilitate these trades back and forth. Now, there's a few other things in there. Being a decentralized exchange, a lot of the benefit goes to the people that are participating. So the people that are providing those liquidity pools, the value of each of those tokens are going to be rewarded when people trade those tokens back and forth. The fee right now for the smart contracts is 0.3%. Well, 0.25% of that, so the vast majority of that fee, goes to those liquidity providers. So they're the ones that are getting most of the benefit. That other 5 basis points does go to the platform to help facilitate all kinds of other things. And then that becomes the liquidity layer. And then other people can build on top of our liquidity layer. We have teams like Orbit, like Bonzo, that can then build other things that can tap into those same liquidity pools to be able to build whatever they want on top of it. And they can add their own fee on top of that. Now, SaucerSwap Labs is the main contributor to the SaucerSwap DEX. So we try to maintain a lot of the different things. That's the team that I'm a part of. And we have our own interface fee. The website has a fee of 0.25, another 0.25%. So fairly low, but that allows us to do all kinds of other things like single-sided staking. We have a platform token, which, number one, it allows us to act as a DAO. It's a governance token. When we want to make decisions, we don't make it as, SaucerSwap Labs. We allow the token holders to make that decision. It also serves as a loyalty point, right? There's benefits for using the platform and having that token. So, our interface fee, if you're using our website, some of that goes into something called single-sided staking. So if you provide sauce into single-sided staking, some of those fees are going to go into that. You can actually go to sauce buybacks on X and see how much we're buying back every single day to increase the value of X sauce relative to sauce. So those are some of the things. There's other benefits. If you are providing liquidity in version 2, there's something called LARI, the liquidity aligned rewards incentive, because unlike the version 1, the more you're concentrating your liquidity and you're providing liquidity for that market, the more you should get rewarded. And that's done in epochs. You can get paid out every 2 weeks, but there's a lot of different ways you can get bonuses from that. So either way, I think I've kind of run through what SaucerSwap does, but we can dive into a lot more things that we've done here over the past year, and certainly version 3 a little bit later on.
Oh yeah, I mean, I'm really excited to talk about version 3. I've been a big SaucerSwap user over the years, sort of seeing it go from V1 to V2, getting those LARI rewards, doing the staking, trying to figure out how to maybe exit a position by using by going into one position, because that's a bit more fee effective. Shout out to, who was it who taught me that? I think it was the Gib father. I think the Gib father told me about that.
Yeah,
anyway,
version 2, you can set up like concentrated liquidity to act kind of like a limit order, right?
Exactly.
Yeah.
It's and you then you can exit your position while also getting a fee because you're concentrating it, not financial advice, not
Yep.
financial advice. Just before we go into the next question, I'm quite interested because you mentioned the governance aspects, right? And I've seen quite a lot of engagement over the past few months and pretty big DAO decisions being made by Source token holders. Could you maybe give us one or two examples of some of the decisions that the Source holders have made?
Sure. Like I mentioned, there is revenue for the platform, either in that interface fee or that 5 basis points for every trade. We have to figure out how we're going to distribute some of those. We also have Sauce. We have to figure out how we're going to distribute some of that treasury. Those are going to be rewards in different pools. When we decide how we're going to split those up, we let the community decide on that, the people that are actually holding the Sauce. There was a recent one that I was really excited about. This is something that I'm really passionate about that we can dive into, but we had some of those unallocated rewards that we weren't really doing anything with right now. We were just kind of putting it into treasury. And we had a governance vote to say, can we use this to try to find other assets that we can onboard into the SaucerSwap ecosystem? So we're looking at things like equities, precious metals, new Web3 tokens that we want to onboard, bonds, all of that kind of stuff we're certainly focused on. But some of the things cost money. Like Swarm is a team that we're working with, and they provide equities, right? And they make them completely DeFi ready. So all of that stuff we were talking about before, you can essentially get stocks and ETFs available on SaucerSwap, but they do have fees and things like that associated. So we went to the community and asked, hey, is this something we can use this capital for to bring some of these other assets online? And they agreed. So we're going to be moving forward with that initiative.
Amazing. Well, that point on tokens and sort of bringing more tokens into the DEX, I think that leads perfectly into my next question. Already, the Hedera ecosystem, we've got quite a wide range of tokens. We've got Source, we've got PAC, we've got Bonzo, we've got gaming tokens, IoT tokens, SportsFi, ReFi, stablecoins, etc., etc. What does that diversity say about where the Hedera ecosystem's heading?
Well, I say this all the time, that Hedera attracts a certain type of person, a certain type of builder. They like to dig in. They like to research. They're hardworking. And I know, it's hard to generalize like that, but that's just what I've noticed. These teams are really innovative. I'd love to dive into some of the things that they've built. But of course, most of them—
Joe is one of them teams. Joe is one of those teams.
Absolutely. Absolutely. So they then want to tokenize their business, create these kind of governance tokens and these loyalty tokens and all kinds of other things. And, like you mentioned, we have platform tokens, and that's probably a good chunk of what we have. Sauce is a great example. SaucerSwap is the platform. We have, NFT platforms out there like Centex or Kabila. They have loyalty type tokens as well. We have Bonzo, which is a lending and borrowing platform, and they have an incentive token as well. So those are kind of platform tokens. So then you can interact with the platform and get benefits from holding those tokens. You mentioned gaming as well, and this is one that just makes sense. Like, how many games have you been involved with that has some kind of in-game currency? Pretty much all of them, right? They all have some kind of currency that you can trade. Well, why not make that a token that can then be traded outside of that ecosystem? It brings a lot of benefits to the game builders as well. They don't have to create the marketplace to trade those tokens for in-game assets, which in the Web3 world would be NFTs. They can allow that trading to take place on SaucerSwap if somebody wants to trade that into another token of value, or they can allow Centex or Kabila to allow people to trade those tokens for in-game assets. A great example is a team called Earthlings. They've launched some mini games already, but they're creating a gaming metaverse on Hedera. They have all kinds of things. So you can get avatars with their in-game currency, which is called Steam. You can get land, you can get tools, you can get all kinds of different things. And the nice thing is Earthlings can focus on what they're really good at, creating a game. And then they can let the marketplaces take care of everything else. So this decentralization of passion and skill set is even more enhanced than you see in the rest of capitalism, which already, of course, has a lot of specialization as it goes. We have, refi token, regenerative finance. Dovu is a great example of that one. It just got listed on Kraken as well. They've done fantastic work, and it's a real business that has, real trading of their assets. And again, the underlying engine for all of that is their token. You mentioned stable coins. We already have USDC, USDT0. We have Frontier, the Wyoming state stable coin. And then there's tokens that we have that are going to be coming down the line in the future. And I'm missing some here, of course, but some of the ones that I know I'm really excited about in the future are DePIN tokens. So decentralized physical infrastructure. We have two teams that I'm really excited about. One of them is Neuron. They've created, or they are creating, a network of sensors throughout the world. Initially, they're using them for managing drones and aviation. They already use Hedera consensus service for that, but then they want to incentivize people to run those. They already have hundreds of them out there, of these sensors, and they're using a point system on Hedera to kind of keep track of that. Eventually, they're going to launch their token, and they're going to incentivize people to run these sensors that can be used, again, in aviation, drones, but then on down the line, smart cities and autonomous vehicles, all kinds of other things as well, once they get that network out there. That's one that I'm really looking forward to. And then we have the Kite token, which should be launching in May. And that's from the Sealcoin team. They want to onboard, I love this quote. They want to not only onboard the next billion users, but the next trillion objects. They already have tens of millions of objects that have their chips already embedded in them that is going to facilitate transactional Internet of Things. So things like smart meters, trading back and forth with power companies or between other users and things along those lines. And now they're going to use that Kite token, which is QAIT. Because they're quantum resistant, that's Q, AI, and then transactional Internet of Things. So not only are they going to onboard the next trillion objects, but they also want to onboard the next trillion agents, which I know, Jake, you're really excited about as well. I'm going to leave it there, but those are some of the tokens that are coming out over the next year that I'm really excited about.
Yeah. Well, I was just going to actually jump in because you mentioned Sealcoin, you mentioned Kite. I thought it was Quite, to be fair. That's a good learning on my side. But we've actually got the CTO of Sealcoin, Jeremy Pansier. He's going to be joining us in the technical community on the 29th of April. So big one to watch out for. I mean, this team is absolutely killer. And yeah, I remember seeing stuff like related to the Ministry of Defense or some NASA stuff, right? I'm sure, Brandon, you can remember exactly what I'm talking about.
Well, they already have 22, they just launched one a couple weeks ago, 22 Pico satellites that are already in orbit that are going to help facilitate the communication between these objects. So that's already done. They go up all the time on SpaceX satellites and all that kind of stuff, which of course is exciting as well.
Amazing. That's really, really cool. Yeah, no, it's sort of, Joe, to your point earlier about no noise, pure signal. I mean, we do, as a community, we do need to make a better job of making the noise about this stuff, though, and that's something which I need to do, and I think maybe a call to action to everyone watching, the probably tens of thousands of you now, that definitely let's take it upon ourselves to let other people know what's going on here. Anyway, well, maybe something that people can make some noise about is the recent mobile app which SaucerSwap have just released. So it's now live on Android. Is that right? You had it on iOS, wasn't out on Android. Is it out now there?
It is. It's both out on iOS and Android. The one nice thing is, because we want to get people to use our app, which is a specifically designed wallet. We love Hashpack, but it's a specifically designed wallet to interact directly with that liquidity layer, so the SaucerSwap smart contract platforms. The nice thing about that is it doesn't have any interface fee. The interface fee is zero. So you're just paying the smart contract fee, that 0.3%. So that is one thing we're trying to do to get a lot of people to use the app.
I will put my hand up. I have vibe coded my own internal SaucerSwap, which also doesn't have the. It's just local host, But yeah. So anyway, what sort of are there any other user experience benefits by using the SaucerSwap mobile app besides just the user interface fee being wiped off?
It just makes things simpler for traders compared to now. Hashpack is a fantastic multi-use wallet. You know, it's more the Swiss Army knife. This is a specific knife with a specific reason, and it just makes it really easy for traders to interact with that liquidity layer. So if most of what you're doing is trading on SaucerSwap, it's something you should definitely look into.
Yeah. Now, I do. Well, before we go on to the next question, I've got a new one, which just came to mind because you mentioned AI agents, and I think, Brandon, were you frozen? Are you okay? Sorry, I thought you'd frozen. Can you hear me clearly?
I can hear you loud and clear. Yeah.
Okay, perfect. Yeah. So I did have a question around AI agents, and just wanted. This is a hot take. I know you weren't prepared for this, but how do you see AI agents interacting with interacting with DeFi platforms like SaucerSwap?
The initial place where I see it being used, so there's a team called Bonzo, right? They're the lending and borrowing platform, or at least that's what a lot of people use it for. But they're also launching something called Vaults. And Vaults allows developers to create all kinds of different specific strategies. We're using it mainly for V2 because, as you mentioned, when you're using V2, you can move out of your liquidity range. What some of the vaults do right now is automatically then reallocates you to a new range to make sure that you continue to get those rewards. I think Vaults is going to be some of the first places that we see AI agents being used in, we'll say, like a super beta, because, you know, this is really experimental and people should be very careful when using them. But that's the kind of the first place where I see it being used, developing specific strategies and things along those lines. But speaking of AI agents, Jake, the one thing that I love to talk about is agents are going to have to transact between one another as well. And I think actually our numeraire, our main strategic asset, HBAR, is perfect for that. Now, of course, trading tokens back and forth on Hedera, all of the tokens are fairly cheap, 1/10 of a cent. But, you know, they call it the cryptocurrency service, which is just HBAR. And the reason why I didn't really understand it at first. I'm like, well, if it's just HBAR, is it really a service? But what I think about it now is that it is a low value transfer mechanism for things like AI agents. It's 1/100th of a cent compared to 1/10 of a cent. So I think that because of all the benefits that go along with Hedera, HBAR is a great medium of exchange for agents. And that's where I hope we can move to. One of SaucerSwap's big jobs is to increase liquidity, because I think we beat every other network that's out there when it comes to that cryptocurrency service, the small value transfer between agents and all kinds of other things. But we need more liquidity. The only thing that might be holding us back there is having enough liquidity where the agents that are partaking in that can make sure that they have the liquidity they need to do everything that they want.
Yeah, no, I think it's a really good point. And I guess just to sort of double down on that, the reason why the price being 1/100th of a penny, 1/100th of a cent to transfer is really important is because for micro transactions, if you need to pay, let's say, I don't know, 9/100th of a cent, but you're using a traditional token, suddenly your costs have doubled because you need to pay 1/10 of a cent, which is still really great, right? I mean, sending $1 million for 1/10 of a cent is amazing. But for the agentic economy, where probably things will be a lot more smaller, a lot more real-time streaming, it makes a big difference. Anyway, final question. You're also known in the ecosystem as the HBAR bull. I'm sure that's what everyone knew you before even Brandon. You're one of the most recognized community voices on Hedera. And from that perspective, what are you seeing in the community right now? What's getting people excited?
Well, I would say the one thing, and this is, again, it goes to attracting builders that really come up with innovative things. And we just saw a partnership between one of our NFT projects, the Dead Pixels Ghost Club, and a meme coin in Gib. They partnered up. Actually, the Dead Pixels Ghost Club bought 15% of the supply of Gib, which is now listed on Kraken as well. And what they're using it for is, again, they're providing that liquidity on SaucerSwap, getting those rewards we talked about, and then using that to buy back their ghosts for another innovation called the Forever Mint. So it provides them with additional liquidity to continue to fulfill the vision that they have. And it has us at times being the top in the top 5 as far as most traded NFTs, not just in, Hedera, but we're talking about across all of crypto. And these are the kind of partnerships, again, it's the specialization where you have a team that's really good at NFTs and you have a team that's really good at fungible tokens. Why would they create their own of each when they can partner up and allow everybody to focus on what they're really passionate about? So that's one thing that people have been really excited about recently. And getting listings on a tier 1 exchange is exciting, especially for our top meme coin.
Yeah, no, it's a really good example of, I'm going to butcher the saying, the sum of the parts are greater than the whole. I think that's right. I think I've said it right. Maybe the sum of the whole is greater than the parts, but whatever it is, this is a textbook example where working together, we've all got our expertise, and it means actually that Hedera isn't just shooting Hedera is playing up with the big leagues, right? And actually, I'm pretty sure right now, Dead Pixels Ghost Club, I saw something in an internal Slack. It's trading. It's one of the most highly traded volume NFTs. Yeah. Unfortunately, because CoinGecko don't read from it, not showing it on CoinGecko, but this is happening right now. So another example, call to action to those in the audience. Find out some posts from Dead Pixels Ghost Club or whoever and amplify it. Let people know that this is happening on Hedera, because these are the sort of things that will attract and get people interested in the stuff that we're building. And I guess on that point, on those people, reasons why you should come to Hedera, we have none other than Joe Da Silva going to talk about Kea Credit. And Joe, I want to start off with something a bit different to usual. We're going to go onto onto the business side, right? Because credit for small businesses, especially in emerging markets, is often described as broken. Now, what does this actually look like on the ground? And what's the human cost of solving the problem that you are solving?
So, Jay, the easiest way to understand this is through a real example, right? So, imagine a small business owner. Let's take a lady entrepreneur, right? So she runs a trading company, and I've got confirmed purchase orders, real invoices from buyers, real revenue. But she needs, let's say, $50,000 to fulfill the next order. She walks into a bank. They say no collateral, no loan. So she either loses the contract or depends on a money lender who then loans her at a 40% APY. That would essentially kill the deal, or she barely survives just for the cash flow purposes, right? So that's the human cost that we are tackling. It's not that the business isn't real. It's a system that wasn't built for her. It was built for business that already have assets, already have credit history and relationship. Now this is going to be surprising for you guys, right? Globally, 131 million firms or businesses face these kind of problems. And the global credit gap is over 5.7 trillion. And no one talks about it loudly, right? And the people hit are all these women entrepreneurs, micro SMEs, expat founders, the ones that builds the most with the least backing. So what Kea does is simple. We look at actual businesses, not just the balance sheet. Like for us, let's say your cash flow, your invoices, your trade data. Our AI credit scoring mechanism that works in 15 seconds connects you to global capital, no middlemen, no waiting in the queue, no bias, right? So we are just not solving a finance problem. We're giving businesses and people a fair shot to get capital. Amazing.
Well, I mean, I was literally just at one of the governing council's offices the last week, and we were talking about this exact thing. I think I need to make an introduction. So let's follow up on that after the call. But that's really, really awesome. Now, walk us through how Kea works, right? Because what does a credit decision actually look like on your platform, and what's different about it from a traditional bank doing the same thing? I think you've briefly touched upon it, but I mean, let's go into a bit more detail here.
Yeah, so let me walk you through step by step of this process, right? So when a business owner approaches us, he or she uploads all of their documents. It could be bank statement, invoices, trade data to our proprietary AI agent, which we call it KeaFi today. See, all these documents are compiled. It runs, and our agent runs it through 200 plus risk signals and gives a first level of AI underwriting. And you know what's interesting is it gives you in less than 15 seconds. right? So in a traditional bank, the same decision take a minimum of a week and a half, or even a month, right? And even after that, it's opaque, biased, or geographically locked. So don't get me wrong, our AI agent do not replace the human at any point of time. It accelerates them, right? A manual underwriter takes our AI report, finalizes the full risk assessment that can be done in 48 to 72 hours, which in comparison with a traditional banking or financial system, right? But here, the part that's really different is cross-border lending has always been messy. It's not because the lenders do not want to lend. It's because, simply they cannot price in the risk of SME data, right? So they don't have the right tools to do that. So what Kea does is it takes these traditional businesses, their invoices, their inventory, their trade instruments, or anything, right? So for example, even the royalty of future contracts that generates future cash flow in 30, 60, 90, 120 days, we bring it on chain. Then on chain, that becomes an on-chain credit score. So what happens is their risk and reputation is becoming on-chain, right? So many other protocols can in future depend on these scores. So lenders now anywhere in the world can now see the risk clearly and lend on it confidently. So they deploy the capital. So instead of business being stuck with whichever local bank, they are now getting access to the global liquidity pool. So what essentially happens is speed, transparency, and global access. So that's a difference that we are making.
Amazing. And just a quick call out, actually, for those of you who are watching and you go, hang on, I thought Brandon said he talked about V3. You're going to have to stay to the end. That was my human error. Joe, I didn't want to, let's keep going with you, but we are going to loop back to V3 at the very end. And that's a human mistake that an AI wouldn't make. The AI would have said that question. Anyway, right, back to you. I just wanted to call that out. Stay to the end to hear about V3. You definitely want to hear about it. I can give you that. So, Joe, why did you choose Hedera?
Okay, so this is a great question and super personal to me, right? So my early believers of this project was Vignesh and Greg, right? So the two amazing personalities in Hedera. So they were the first who saw us building, backed us, and helped us make the decision all about Hedera. So now the real question is why Hedera? Like I briefly touched upon this question a while ago. So most blockchains, what we have seen are noisy, meme tokens, micro apps, speculation. But we see Hedera built differently, right? It's an enterprise-grade network designed for real businesses application, right? And also, like I said, governed by a council of global institutions like Google, IBM, Boeing. So that's the room where Hedera sits in. So no brainer. So for a product like Kea, where we are dealing with real invoices or real businesses, the credibility matters enormously. Our lenders need to trust the infrastructure as much as they trust us. Transaction costs on Hedera are predictable and very low. When you're processing SME loans, right, we basically work on thin margins or APYs, and this cost actually handhold us to greater revenues or maximizing our revenue propositions. And Hedera's token service or tokenization studio is exactly built for this, right? Native asset issuance, programmable compliance, fast finality, not something you are hacking together, right? So we designed for it. So when people ask me, so I often get asked this question a lot, like why not Ethereum or Solana? Those are great chains for DeFi speculation. So we say, we are not here to speculate. We want to bring real businesses on chain. We want to bring real assets on chain, and this chain is looking into the future, and that's where we want to build. So purely on signal stake. So that's my.
Yeah. I mean, it's like just a quick follow up, I guess. I mean, you guys are a proper business, right? You've got cash flows. You've got you've got the processes that the traditional Web2 businesses are doing. How important is Hedera's fixed fees for that and for you when doing things like forecasting and growth forecasts?
Oh, so it's absolutely negligible when it comes to Hedera's fees, right? So it's 0.0001, which is nothing. So and when we are talking about maximizing revenues by it's not just cutting a whole lot of costs. The entire transaction processing itself is way cheap, so that we don't it's not even on the back of the head that we need to reduce this kind of cost. So
Right, okay.
that's a no-brainer.
Yeah. So it could even fluctuate, to be fair, because it's so small, even if it fluctuated between. Anyway, right. Let's go on to the final question before heading back to Brandon for V3. I'm interested in hearing some of the milestones that Kea has hit so far on Hedera, and also what's next.
All right, so this is where I want to break. I was keeping these updates for today because I wanted to break it out to the community. So we've started tokenizing assets this March, and as of today, we've tokenized over $3 million in SME invoices, and all of them are fully funded. So right now we do have 64 borrowers and 85 registered lenders. We are looking at a very positive order flow of more than $30 million in shortlisted deal flows. We currently ranked 7th on the Hedera on DeFi Llama as we speak, right? We were looking at becoming the 5th very soon this month, hopefully. And we're just getting started. Jake. So 2 important verticals that we are rolling out. And one of the vertical is just a click away from going into mainnet is H-Bridge. So this is going to be an exclusive native token bridge for Hedera that makes cross-chain asset movements 10x cheaper in Hedera, right? So we're not going to focus on any other chains. We're just going to build this on Hedera exclusively for Hedera, because the reason being we want that kind of liquidity to flow into the protocols in Hedera, which will directly and indirectly benefit Kea at all points, right? So that is one thing. And the second most interesting thing that we are building on Hedera and for Hedera is a Visa-powered spendable layer on Hedera. The idea is simple, right? So businesses borrow through Kea should be able to spend their capital seamlessly in the real world. So we're going to introduce something called Flow, FLO. So this is going to be a card. In the phase, so it can be a charge card. In phase 2, we're going to offer it to different protocols where people can use their positions in those protocols to borrow against them. So we are not going to deviate from our lending narrative. So they can borrow against their protocols without actually diluting the TVLs of their protocols, right? So the TVLs will stay on Hedera. So Jay, we are highly committed and loyal to Hedera, I would say.
Dude, I mean, that's the first time I've heard about Flow, but wow, that sounds amazing. That is really, really impressive. I mean, I know about H-Bridge. You and I were talking about H-Bridge for a while, and I think I want to mention a testimony of sort of the grit and determination that your team showed. I know there was some pushbacks and some walls, but you guys just kept doing it. There was nothing stopping you, literally. And we sat in a few calls, and I was working closely with Luke, who unfortunately is a bit ill today. But it was it's really inspiring to see you still here and not just doing H-Bridge, getting Flow out as well, man. I mean, damn.
Yeah,
amazing.
Yeah,
amazing.
We got some sample cards designed. I'll shoot it to in the socials very soon.
Hit me up, definitely, man. I definitely want to see that. That's really, really great. Okay, let's go back to Brandon. I know you were itching to share, and again, put my hand up for skipping past it. But Brandon, you've announced V3. You've announced SaucerSwap version 3, the sequel to V1 and V2, which we just heard about. V3 includes a CLOB style model. CLOB is a central limit order book. Now, without going too deep into the roadmap, what is the vision for V3, and what problem does it solve that V1 and V2 didn't solve?
Well, V1 and V2 are great for, setting up a system of trading these tokens on a DEX. But it's not what people are used to. They are used to, bids and asks, what you would see on your brokerage account. I'm going to pay X amount for this share of stock or whatever it might be. And this mimics that. This creates that order book of bids and asks. You know exactly how much you're going to pay. You don't have to worry about all of those other things, that you might get with V1 and V2. It's just much more familiar. Degens probably don't care that much. Regular crypto traders don't care that much, but institutions do. And that's what we're moving towards. We want to not only be perfect for retail traders, but also be really good for institutions. And this is what they're used to. So this is what we're moving towards. You know, like you mentioned, a central order limit book. We know exactly what that is from working with centralized exchanges, brokerages, and so forth. And the way it's actually going to work is to make it mimic that, you're going to have intents. You're going to assign an intent to have a certain price, buy or sell an asset at a certain level. Nothing actually triggers at that point. All you're doing is signing an intent. So you can take those orders off as well, and you aren't charged any fees. It's not charged until it actually gets filled. The other nice thing is version 1 and version 2 are not going anywhere. They're still going to be there. You're still going to have those liquidity pools. So if the prices reach where it is on V1 and V2, your order will still be filled. So that will still happen as it was before. We're still going to tap into that liquidity as a backup, but we're going to have both. We're going to have the orders that people put in as far as bids and asks, and then we're going to have that backup liquidity. If it hits the price, what you're seeing on V1 and V2, it's going to fill them from those as well. There's going to be some additional benefits for people that are holding SAUS and XSAUS. So the native token, again, it's acting like that loyalty token or something along those lines. And then the other thing about it is the fees are going to be a little bit different, which people are going to really like. So if you're supplying liquidity, if you're setting those bids and asks, then you're going to pay no fee at all when it gets filled. If you're a taker of the liquidity, if you're like, yeah, that price is good, I'm just going to buy it or sell it at that price, then you're going to be paying between 5 basis points and 15 basis points. So still super, super cheap. And what I like about this is now we're getting a lot more access to stablecoins across Hedera. USDC is the main one, and we have it listed on Binance. We have it listed on Kraken. We have it listed on crypto.com. So the entire world can really tap into that. It's really good for businesses as well that might want to leverage that for peer-to-peer payments. But if you have a token that you want to sell, and we do get to V3 here, you're going to be able to sell it using V3. Pretty much if you're a maker, if you're supplying that liquidity, you're not going to pay any fees. You can trade into USDC, go to some of these platforms and trade it right in, go right into dollars. Once we get support on Coinbase for USDC, essentially you're going to be able to go there and they allow complete swaps directly from USDC into US dollars. So your fees compared to a centralized exchange using V3 on SaucerSwap are going to be dirt cheap. So I'm really excited about it.
It's really cool. And you know, I'm actually quite happy we saved this question to last, because we just heard Joe talk about flow and how you can use your on-chain holdings and liquidity providings as collateral. Joe, I'm interested in hearing, I'm just interested in hearing what you think about V3 and how that might complement your business model.
Yeah, it's all about you know, it's all about utilizing flow. Is all about utilizing that liquidity to work rather than sitting idle, right? So it's super complementary, and so I'm super glad that Brandon has brought this up. So and in fact, so before the beginning of this call, I was telling Brandon that we are starting to talk with SaucerSwap soon to see possible areas of collaboration.
Amazing. Well, I'm happy that the ball's been rolling.
It's exactly. I mean, these kind of teams are perfect for SaucerSwap. I'm kind of focused on market expansion. That's certainly about bringing new Web3 assets in, but we also want to bring all the other stuff. Like I mentioned, we want to bring equities in, we want to bring bonds, we want to bring precious metals, allow people to have access to all those different assets. Of course, there's regulatory hurdles that we have to figure out around these things. There's lower bars for some and higher for others, but this is the kind of stuff that Joe is working on. We would love for his assets to become DeFi ready, and you be able to trade those kind of assets on SaucerSwap. It'd be really exciting.
Right. So also, Jay, if I may jump in quickly and say that we want also to help people or the retail to make arbitrary margins from their borrowing and lending itself. Like for example, they have a protocol that is running. So we want them to borrow against that protocol put it into one of our vaults that give them a higher percentage of APY and get that extra kicker, right? So these are the things that that's going to complement each other. So we're going to like we're weaving in different products into these positions wherein people can use this throughout the entire Hedera ecosystem, right? So we're bringing we see Hedera as a big ecosystem that we are acting as a weaver, trying to weave in all the ecosystem partners, right? So that in that way, we see that we add a lot of value to the chain as such, and secondly we bring in or we enhance the value propositions for all the partners that are associated with us, right? So
yeah, I mean, this is where DeFi gets really exciting, right? This is where tokenization and blockchain, where its value proposition really comes into play, where you have these different financial ecosystems, which traditionally are silos. Traditionally, you have the trust issues in that, okay, I've got $1 million worth of stock, but I still have to go up to the bank and I still have to prove that and speak to a human and spend weeks to then get a loan. But in this world, you don't need any of that, because that $1 million of equity is on SaucerSwap, and you can trust that, and you can verify that, and you can then use that to automatically collateralize using a smart contract, such that if any particular decrease, whatever, it gets automatically liquidated. You can do all of these things in seconds, right? I mean, it's just like it's a no-brainer. Anyway, let's go over to some of the community questions. We've got some really good ones over here. We've got a question. No, we've got is that a question? Oh, I can't put the questions up. I'm not an admin. We're quite stingy with our StreamYard bill, I suppose. We've got one question from Andrew D. Villibis, XRP. I think it's more of a statement, but maybe some of us can discuss it. I mean, maybe I'll hand it over to Joe. Fixed income products on chain has perfect PMF. I agree. Maybe Joe, could you share some context on why that might be the case? Or I guess before we do that, for those who don't know what a fixed income product is, fixed income will be something like a government bond, where you get a coupon which is sort of guaranteed. So you buy £100 government bond with a 6% interest rate, you get £6 coupon, and that's the fixed part. It's not something which might massively increase in value or sort of decrease in value. As oversimplified it a bit, because bonds can increase and decrease in value, but that's pretty much what fixed income comes under. Joe, I'll hand it over to you.
Yes, so Jake, we were trying to drift away from government bonds and stuff like that, right? Because we've actually found a way that we can bring in fixed income products using private credit. The reason being, we are now touching a deal where we are trying to over collateralize that deal by 170%, which means at any point of time, the capital is always protected. If there is a default, then this product, this collateral that's in escrow gets released to the lenders via smart contract. And there are APYs ranging from 8 to 15% APY, right? And that's in stable coin. So that essentially can be called as a fixed income product, right? So when Kea go to the market, we say that, hey guys, we are built for the bear market, or we are a Web2 business. And right now what we're doing is we are using Web3, we are using the blockchain capabilities to amplify the business and pull in the global liquidity out there, right? So when there are different protocols offering wallet, great APYs, right? So when the market gets bad, that's where protocols like us come in with these kind of fixed APYs for the users and say, you know what, subscribe to one of the vaults, and in 30, 60, 90 days, this is the revenue that you're going to take, and you're collateralized by 100%, 150%, or over 200%. So something like that. Yeah.
And I think another reason why, well, this applies for other equities as well, dividend paying equities, but the fact that you can issue a dividend or a coupon using a smart contract based on the ownership of whoever owns the share in the company or the share of the debt, I'm not sure if that's the right way to describe it, but that you can just automatically do mass payments so easily. That's another really strong fit. I'm going to go over to a question from Forever Rich. I am an avid Flare DeFi user and love what I'm hearing. Is there a way to earn HBAR through participation? I think I'm going to broaden that question out a bit more. And Brendan, I'm going to ask it to you. Is there a way that people can interact with the platforms and get rewards?
Absolutely. Like when we talked about before, you can supply a pair of like USDC and HBAR and certainly get rewarded in HBAR for something like that. We have some other incentive rewards where you can get HBAR for that kind of stuff. And then, of course, we have native staking on HBAR where you're getting over 2% just for holding HBAR. So that's another thing on the edge. There are plenty of opportunities in the Hedera space to get some DeFi yield. And of course, HBAR is a huge part of that.
Thank you very much. There's another question. Well, again, it's another statement. We need some Forex trading next to pull the traders. I'm going to spin it into a question. Brandon, is that something which SaucerSwap are talking about? Any Forex pairs coming on chain?
We already have the Swiss franc. We have a stable coin.
Right.
And of course, we have the US dollar pairs. We have AUDD. I don't think we have it on SaucerSwap yet, but it is supported within the Hedera ecosystem. There's some other teams that are working on Forex as well in the Hedera space, but absolutely, we don't want them to have to leave the SaucerSwap space. So we are going to be adding that kind of stuff. I don't think, even though it's supported on Kraken, we don't have Frontier yet, but things like stablecoin pairs would be great on Hedera. So you could go and buy the Frontier stablecoin that's being put out by the first state in the US to have a stablecoin. You could pair that with USDC, provide that kind of liquidity for people that want to go back and forth. There's going to be plenty of opportunities around that, and I only see that expanding.
Yeah, it'd be an interesting way. I'm thinking as a business who trades in, who does business in different currencies. I'm sure there's a way to hedge by using maybe concentrated liquidity or whatever. I'll have to sit on that a bit more. But right, let's go back to some of these questions. I've got one. I can take it quickly. Is HBAR X402 compatible? Yes, we are. So you can use Hedera with the X402 protocol. They actually just released a new version, X402 version 2, which Hedera is a contributor to. So there'll be a pull request which adds our spec, and yeah, you can totally use Hedera for X402. And actually, to Brandon's point earlier about HBAR specifically, HBAR is a great option for X402 because the transaction fee is 10 times less than a traditional token transfer. So if you're able to dynamically price things in HBAR, you probably have to have some sort of oracle to figure that out or something similar. But actually paying with HBAR in the intermediary would help you save a lot of fees and provide products for a lower price. What have we got next? We've got a comment from William PMC D8548. What prevents the Linux folks from integrating Hedera into their operating system releases/updates? Thank you. I would say it's probably slightly incompatible. How can I describe this with an analogy? Well, okay. They could, in theory, integrate a Hedera wallet into their OS release, but they're kind of two different sides of a coin. I mean, the Hedera software, the high road technology, can run on a Linux operating system, but they're almost serving slightly different problems. I'm not sure. Does anybody else want to add to that?
Well, I certainly don't think that would be a problem if they did integrate things that leveraged Hedera. That would be a good thing, right? We want as much of that as possible.
That's a great point. Yeah. I suppose if they found use cases maybe for consensus service, if there's like a logging use case, or yeah, that's a really good point. So maybe if you're using the Linux, if you're using Linux software for like really for a business use case where you need to have a lot of transparency, logging it natively on the Linux layer as low down as you can, even better would be the hardware layer like Equity Labs are doing with Blackwell, then that's a really cool use case. And I think we need to have the business case and bring it to them. We are, of course, on the Linux Foundation Decentralized Trust as one of the founding members. So if you guys have ideas, hit us up and we can get you in the hackathon, we can get you in the incubator like Joe is, and help take it to the next level. Right, I'm going to ask one question before wrapping up. Another question from Forever Rich. This is a very good question. Brandon, can we arbitrage on V3?
Sure, just like any other arbitrage opportunities, if you see something like on Kraken, because we have HTS tokens that are trading over there, and you see it that's cheaper, or there's an opportunity to, because of a price differential, to leverage V3 for something like that, absolutely. But as I mentioned before, as far as across SaucerSwap, there's kind of an automatic arbitrage taking place between V1, V2, and version 3. So that's going to happen automatically within SaucerSwap. So you don't have to do that, yourself, but between other exchanges, other decentralized exchanges, centralized exchanges, and SaucerSwap V3, absolutely.
Great. Well, I think that's it from everyone. We've done very well for time. Do either of you want to have any final comments?
One last thing is, Jake, I purposely didn't miss to say out, but we see immense possibility on using Hedera's HTS, where we are also exploring a way that how we could use Hedera's native token to do cross-border settlements or instant settlements for these forex-based companies or payment providers, right? So that is something that we are actively discussing with one of the payment service provider, and one of the initial jurisdiction is Pakistan and Bangladesh that we are actively exploring. So so many use cases are coming around us. So for us, we make that lending possible for let's say a couple of days, 3 days lending. So with this Hedera's immense scalable option, we are able to do a lot of things. We are able to spread our wings, and we see that, and we are seeing more and more support coming from Hedera, and we will keep on building. We'll keep on shipping all what is needed. We're super glad to be a part of this ecosystem.
We're super glad to have you here, man.
Thanks so much.
Brandon, any final words from you? Yeah, I mean, it's all about growing the ecosystem, right? And initially I thought about, between DEXs, I was always looking at DEXs between Hedera, and those aren't our competition at all. They are partners because we all want to grow the ecosystem. And then you're, of course, looking at DEXs on other networks. I don't look at those as competitors either. I'm kind of looking at competitors as the brokerages and the other exchanges out there. I mean, the traditional exchanges, the New York Stock Exchange, the FTSE, the Nikkei, all that kind of stuff. Those are the kind of assets that I would love to bring on SaucerSwap, still serving all of the people that want great Web3 assets, but also going after those traditional assets. And, right now with version 3, even with where our EVM stands now, we're testing it, and it's more performant, this isn't surprising with Hedera, than Hyperliquid today. And Jake, that they're working on Project Bonneville, which is going to take us from 150 million gas to possibly over 1 billion gas. And if we got to that point, and I know that's a bit of a moonshot, it's going to take some time. It's not going to happen tomorrow, but it just shows that if we're already outperforming teams like Hyperliquid now with 150 million gas, if Hedera goes to giga gas, we're going to be off the charts. And that's where I think we're going to serve really well, competing with our main competition, which is those traditional exchanges.
Totally agree. And I think just on that point, again, HederaCon in Miami, you'll be seeing people at these traditional financial brokers, exchanges, the central depository, clearing houses, all of that stuff. They're all coming to HederaCon. So definitely sign up if you're in the area, fly over if you can. Unfortunately, I won't be there, but there's going to be lots of awesome people. And then the other one is check out the Hedera Community Hub. This is a new website which we've set up, and it's got a lot of information for anyone who's been in the ecosystem, anyone who's new in the ecosystem. Definitely check that out as a first point of call. But besides that, that's all I've got for today. We had an amazing few guests with us, and I'm really excited to see how their journey progress over the next years and decades.
Thank you for having us, Jake. Thank you, Hedera community.